So here's the table of the 56 best growth companies of the whole US stock market according to our criteria. Starting from the cheapest one, Pinduoduo, and the last one we have with discount is Uber, trading 10% less than its historical price to sales value. So we have 16 companies that trade under the historical value. So in a second I will tell you the criteria we are looking for in the companies. But first I tell you the methodology about ranking. So Pinduoduo first. Today we will have a look into ACM Research, but the ranking is based on price to sales, comparing to the historical mean. So, for example, why we think ACMR has potential to 5x is because its historical price to sales average value is around 5.5, and today, despite its strong growth, the price to sales is around 1.18, meaning it has a discount of 79%. So 16 companies in this table are trading less than its historical fair value. So the criteria is we want to see good year-over-year. Every single company has done last 1.5 years in sales. They have exceeded year-over-year revenues. So last 6 quarters, 1.5 years, all positive quarters. So that's 100%, and currently they are doing record revenues. The same goes for the book value as well, and most of them are double digits. The revenues are in double digits. Book value as well, 1.5 years, all 100%. These companies have increased the book value per share, and the numbers, almost all of them double digits, and they have some profits, so the net income is positive. And for example, if you talk about the ASMR, the net income margin is around 15%. So let's have a look into some of the graphs. So this is the ACM Research. We see good steady growth since the inception. So the numbers, we like to average them out, smooth them over 1.5 years, because there is a lot of randomness if we just look the quarters. But most companies, if we over 1.5 years, we see the real picture. So year over year, now at 100%, all time year over year, close to the benchmark we want to see. Compounded annual growth rate has been increasing, so it may be bottom at 20%, but this is exactly what we want to see. We want to see increase in the compounded annual growth rate. Book value per share, sharp increase. Last 1, 2, 3, 4, 5, 6 quarters, like what is it, around 50% in book value. So what's a good sign is the book value has been increasing. So last 4 years they have not had, they didn't have a negative quarter in increasing the book value, not once. And so maybe one quarter it was close to zero, but if you look at the average values, the last quarter, if we average last 1.5 years, then it's still close to 15%. And why it's a attractive buy is it's the price. So despite strong growth since 2015, there's a discrepancy between the price and the revenues, and it's not it's a big discrepancy. For some reason, the stock has been neglected. So during COVID, we saw plus 20% price to sales, and now it's almost 15-16 times less than that. So it's close to 1. And if you take the percentage, so we have to bear in mind the mean actually changes. So it's not constant. So these numbers, they do change at the time. So at that time, 2020, during COVID, the peak was over 3.6 over the mean, and now we are pretty much bottoming out. We trade less than 5, almost 5x less than the mean. So if you look at today's price in US dollars, the stock price is around $15. If we go back to the historical mean, we can see $75 per US dollars for the stock price.